Welcome, ladies and gentlemen, to Commodity TV and a new edition of our online interview series. We want to get an update from Calibre Mining, and Ryan King, the Senior Vice President, Corporate Development and IR, is here with us. Ryan, good morning to Canada. How are you?
Well, good morning, Johan. It's a little chilly this morning. We've got snow on the ground, but
no, really. Yeah, beautiful. Yeah, when I look outside here on my balcony, I see the Sanctions mountain and it's covered with snow completely. Yeah. But despite that, I have just had an espresso outside with my wife, so beautiful.
Very good. Very good. Awesome.
Yeah, okay. The weather is great. Now we know what the weather look like in Switzerland and Canada, but much more important to talk about. What happened with Joe Biden going against Nicaragua and those I would call it fancy sanctions, because makes no sense to me.
Yeah, I mean, no, that caught a lot of our shareholders and investors, I guess, a bit off.
I'm a shareholder too, by the way.
Yeah, myself included, right? But we were not aware at all. We had no inkling of that coming. Mm-hmm. But yeah, as you mentioned, on October 24th, the U.S. Treasury Department expanded an executive order, and out of that, two additional sanctions came about. One to an individual, one to an entity. The entity was, of course, the General Directorate of Mines in Nicaragua, and quickly thereafter, there was several U.S. news outlets that incorrectly suggested that all persons involved in the Nicaraguan gold mining sector are now sanctioned under the new executive order.
But that's not.
Of course, that's not the case. It was one new individual and one entity. The DGM, we refer to them as the DGM, and just just for the viewers and audiences, is that the DGM, is a subordinate entity of the Ministry of Energy and Mines. So, like all mining jurisdictions, we, Calibre, have requirements as a publicly traded industrial company to report, our routine business information to the regulatory authorities, which is, in Calibre's case, it's the Ministry of Energy and Mines. And we submit our reports, one-way reports, to the DGM, the General Directorate of Mines. But, after consultation with our advisors, we're very confident that we're in complete compliance with these new sanctions. But it is important to note that, since 2019, since we acquired these assets and unlocked a lot of value with these assets, there have been 55 U.S. sanctions to individuals or entities since we acquired these assets, right? Mm-hmm. So we've navigated these waters since day one. And this is not really new to us, but it's how it was reported that caught a lot of people on kind of
on the wrong foot,
unknown territory, right? Because it was kind of like, well, what does this all mean? Yeah. But as we continue to explain it, it is not the whole Nicaraguan gold mining sector that is sanctions. It is one new individual, and it is one new entity in which we do not violate the sanctions. Because in order to violate a sanction, you have to make payments to, you have to have exchange of services with, you have to have agreements with, or you have to have transfer of property. And we have none of that with the DGM or with the individuals. So, and that's the case for all of the sanctions that have been put in place to individuals and entities in country. We're in compliance with them all. So, yeah, it was unfortunate the U.S. news media incorrectly reported on that, but it's things that we deal with, and we'll continue to educate our shareholders and future potential investors in it, because it does present a very compelling opportunity now for Calibre.
Exactly. So, and also I think it's a very compelling buying opportunity for shareholders which want to average down, because as far as I understand it, you produce gold, you sell your gold, you make money, business is going as usual.
Correct. Yeah, no changes at all to our business.
Fantastic.
Right? So we ship our gold to Asahi, a refinery in the United States. We have no changes at all to the business. So that's ongoing. And as of the end of the third quarter here, we sold 161,000 ounces of gold. We had a solid quarter. in line with all 9 analyst expectations. Today we have 66.5 million US in cash. And so, yeah, the business is in great shape, and we're actually set up to have a very strong, our strongest quarter of the year is Q4 here. And we're online, or we're on track, I should say, to have grade-driven production growth in 2023, 2024, as we've been guiding, and we've given the market an outlook. So, yeah, it's business as usual.
Okay, super. So that means I think you also had in Q3 a little bit of a problem of an unplanned outage at the carbon plant, but that's all settled.
Yeah, no, that's a good point you bring up. In the beginning of September, we had an equipment failure, which is in the Libertad. So what happened was we took down the whole circuit, the carbon ADR plant. We were unable to strip gold out of the carbon. So we actually paused that we had an outage for about 25 days. Mm-hmm. And that resulted in a significant increase in inventory in the circuit because we continued to mine and we continued to mill. So we grew inventories through that period. So it really delayed sales of gold. So now it's back up and running. The end of September, it got back up and running. So we increased that amount of inventory. So we had a big working capital adjustment. And cash came down for the quarter because we weren't able to sell, in excess of 7,000 ounces of gold in circuit.
But which will be done in Q4, right?
Q4 and Q1 of next year. Yeah, it'll start to come out. That's right.
Super. So it's not lost. It's not lost. It's just delayed.
It's delayed. It's not lost, and it's now back up and running. Yeah.
Super. So I think one integral point for next year is the Pavón Central open pit, and you got the mining permit approved, I think, in Q2. And are you on track for the production start next quarter? Q1 next year.
It's an exciting time for us, because we permitted Pavón Norte in 2020 and brought that online in 2021, and that was 3 grams per ton gold. Now, this pit, Pavón Central, which we're now developing to, bringing power, roads, infrastructure to not too far away from Pavón Norte, it's 6.5 grams per ton gold open pit. And that's going to be coming into the existing Libertad infrastructure this coming Q1 of 2023. So very exciting time for us because we'll have similar volumes, but over double the grade. So we do anticipate that obviously production will go up, but we also anticipate that we should see a reduction in total cash costs and all-in sustaining costs per ounce. At the same time, we also got the permit for our Eastern Borosi open pit and underground projects. So that we are developing that as well. So we're updating roads. We are clearing sites and getting infrastructure on site. So probably by Q2 of next year, we should be in a position to start mining and hauling material from there. And we'll start with our what's called the Guapanal open pit, and that'll be 6.8 grams per ton gold in reserves. So very exciting to see that higher grade material coming into the Libertad facility. And this is the unique opportunity we have, right, is that we have existing infrastructure with surplus capacity, right? And so we now have executed and demonstrated that we can mine and haul 250, 300 kilometers away from our central processing facilities. And it's working very well for us. And it allows us to continue to reinvest in mine development through operating cash flow, as well as exploration. So we're on to the exploration now, and we've had some exciting results this past year.
I just wanted to comment to that because I saw in the third quarter, Pantheon North, within the Limon complex, you had 52 grams gold over 3.8 meters and 43 grams over 3.3, 35 grams over almost 3 meters. I mean, and 26 over 8. That is amazing.
Yeah.
Is that continuing in your exploration now?
So what's exciting about this, from my perspective, is that you look at the Limon complex, and we can categorically now say that this is a world-class, low sulfidation epithermal district. It's been in production since the early 1940s. It's produced in excess of 3 million ounces of gold, and yet we continue to find new zones of in this case, high-grade gold mineralization. So, what we did at the end of last year and got the data early this year was we flew a VTEM geophysical airborne survey over top of the property. which of course we've got many layers of science already, but this further kind of identified where we're finding gold mineralization. It's a great representation. We've got it in our presentation on our website, as well as in some of our news release materials. But what it is when you look at the image, it's the contrast between kind of orange, yellow colors and pink colors. And on that contact is where gold mineralization has been found by previous operators, B2 Gold. They did not have this VTEM airborne survey, right? So now we layer that on top of all the other science we have. And it looks like, it demonstrates that this contact does go for multiple kilometers. So we don't know yet, but we are drilling. We've got 5 rigs on the Pantheon kind of district area, so over multiple kilometers now, and we're testing that out, and we'll see. But I'm pretty encouraged by it, just because of the historical discovery, the recent discovery, the past production. So I think there's a really good opportunity that we will find additional high-grade shoots along this trend. It's exciting because this area now, we anticipate that'll be the highest grade underground gold mine on the property, and it's only 800 meters away from existing underground infrastructure. So really good. And that's not in our resource and reserve statements at all.
Lovely. Like to hear that. That's a lot of upside potential. And I mean, grades like this in between tells me that this is hyper economical.
Oh, I think this is going to be one of the most economical deposits we have in the portfolio today.
Absolutely.
Q1 of next year, we'll highlight that when we come out with our annual resource and reserve updates. I mean, we could be talking in excess of 10 grams per ton gold on average. So it's very exciting.
Fantastic. Super. Let's talk about the Pan Mine Nevada, because I always had the feeling, because, we already interviewed also Fiore before you took them over, and I always had the feeling, there's a lot more potential in this Pan Mine, yeah? And it looks to me like that you are really lifting the potential, because you had 3.35 grams gold over 18 meters, 0.8 over 10.7 meters, again 0.8 over 47 meters, and so on, yeah? So it looks to me like how you are exploring, bringing that forward. You are, lifting more and more of, let's say, higher grade areas. Yeah, because to my understanding, in the past, they were producing like with 0.6, 0.7. You are now going 0.8 over a gram, even 3 grams you had already. Yeah. So if I put that, let's say, a bit in an average, it looks to me like that your average grades are 20% higher than it was before.
Yeah, I mean, you're right. I mean, one of the opportunities that we saw at the opportunity here was the fact that the previous operator, Fiore Gold, because they were a smaller single asset company, weren't able to reinvest in everything. So they were investing in Gold Rock. They had recently expanded their heap leach pad. They had recently installed a primary crusher, and had only been investing about $1 million, maybe $1.5 million a year on exploration. And so that really presented a great opportunity to us, because if you don't drill, you won't find. So
very simple, yeah.
and it's a great location right on the end of the Battle Mountain Eureka Trend. Multiple million-ounce deposits along this trend have been discovered, and the drilling at Pan is generally shallow, mostly 0 to 200 meters from surface has been drilled, and you go up further along the trend, and you're finding multi-million ounces that are deeper sulfide material. So we've only been finding oxide material at surface. So there's definitely a thesis there that could be at Pan or Gold Rock, this deeper Carlin style mineralization. But our focus this year was just, drill within resource area, within the plan of operations, and then start to look at and step outside of the plan of operations, and look at targets that have never been drilled. So, but to your point, we've had a number of rigs on the property this year. Do we think that it's going to materially increase production profile? Probably not, but at least in this first pass of drilling. But what it will give us is a good understanding of the initial scale after 1 year's worth of drilling anyways. And it'll help us look at ways that we can optimize the asset, very similarly like we did in Nicaragua, right? Is looking at things differently with a fresh set of eyes to see what could be done. And similarly at Gold Rock, right? We're advancing the Gold Rock project 20 kilometers away, infill drilling, step out drilling. So yeah, there's really good opportunities here at Pan and Gold Rock. So we'll see. We're working through resource reserve updates now. And you're right, we have had some very good widths and very good grades. So it'll be interesting to see what the resource and reserve comes in at for both properties.
Yeah, and the fact is, what I like is that you are still producing, of course, every quarter. So that means you make money, you find more gold, and you maybe can enlarge the production. Because I always have had in my mind with Fiore that they wanted to become, let's say, with those mines, 100,000 ounces, maybe 80,000 ounces a year. Today, I think it's 45,000 ounces approximately. Yeah. So it looks to me like that you are executing that path.
Well, absolutely. I mean, so Pan produces 40 to 45,000 ounces a year. Gold Rock is a federally permitted project. And we've been focusing inside that federally permitted project area, the kind of the plan of operations area. Yeah. And it's a huge land package, though, at the same time. So, yeah, absolutely. I mean, they did a PEA back, I think, in 2020 that demonstrated 50 to 60,000 ounces a year. So to your point, absolutely, we think there's good potential there. We continue to do tech studies, state permitting, geotechnical drilling, et cetera. So yeah, we think there's good potential there. At the same time, we also think there's good potential to expand the overall resource at both properties. So we'll continue to invest in the drill bits and yeah, see, I mean, it's a great geological location. It's a great jurisdiction to operate in. And millions of ounces have been discovered there. So really looking forward to what the future continues to give us.
Super. That's a great final sentence. I look also forward to the future of Calibre. And I'm really happy to hear that with that sanctions, it's not a problem as it occurred in the press, I would say. Sometimes, yeah, you have to read really, really carefully what some gentlemen are writing. But important to me is you make business as usual. That is great. You are executing. And thank you very much for the update, Ryan.
I appreciate being here, Johan. Thanks very much.
Thank you. Thank you. Yeah, ladies and gentlemen, that was Ryan King, the Senior Vice President, Corporate Development, Investor Relations of Calibre Mining. You heard it, $66.5 million in the bank. And the company is doing extremely well. They have only a very, very small portion of debt, which is like, they are net zero debt free. That is great if I take the cash in consideration. And for me, it's important. The sanctions are the sanctions. As Ryan said, they are dealing with it since 2019. 55 different sanctions have been imposed already. And so I think it's not against the company. This is super important to notice here. It's against an individual, against an entity, which has nothing to do with Calibre Mining. And honestly, my price target for the stock is still $2.50 within the next 18 months. And I think it's a fantastic opportunity where sometimes the stock exchange is wrong in the pricing. So have a look on Calibre Mining. Thanks for watching us and bye-bye from Switzerland.